Okay, here we go. And I think I turned that other alarm off, which is okay. Um, Double check and make sure we're getting audio. Okay, anyways. All right, brother Will. Um, I'm getting hurt on what's his name on XSP, of course. It's up today, 73 cents, but I'm gonna wait. I'm gonna wait. I'm not gonna panic. I'm gonna wait and try to roll the strikes. Okay, we know where markets are. It's Friday, basically flat, so I don't have to go through the market condition, but I will go through the inventory. In terms of inventory, I'm going to close SLV because I've already done two rolls on it. So SLV is out of here. So we're going to see if they close it. And let's just double check to make sure that we have a position on there. We're going to try to close it and get out. So I'm getting out. So SLV is first. We're going to try to get out of that and to close that trade because we got about a third of our and there should be liquidity there. Wow, so it's even lower. Debit. Get me out, Tasty Works. It's like the Roach Motel. They'll get you in, but you can't get out. Anyways, EEM is still nowhere, so I'm not going to worry. That's November 15th. Same thing with our XSP, SMCI, TLT. Where's TLT at? It's up 75 cents. I wonder how much credit, if we'll get credit, to move the 86 to the 87 strike. Will we get a credit? No, it's debit. I don't want it. I want to make if it becomes a free trade, I want that. But so far, no. Um, because it's 11 cents debit. Well, actually, it is a free trade. Because if we paid we got 12 cents of credit on TLT, and if we buy it for 11, that means it's only a penny. We'll make a penny. We could make a penny, or we could go for the full tilt. So you know what? It is a free trade. So I'm gonna roll that strike up as a $10 debit. We're gonna roll it up to the 87. So we're one strike, one strike, one strike, and we're gonna see if it'll allow us to do that. Tasty Works. Don't do what you normally do when a brother's trying to get some free money. Tasty Works will say nope, and he won't get filled. So come on and fill me. Um, so this becomes a free trade. The TLT. In other words, it costs us no risk. So I really want this trade because being the TLT moved up just a little bit, that should give us zero risk to the downside or zero risk to the upside. You know, and basically, if this thing does collapse on us, then we have a free trade. Let's see. Okay, it's giving us a 9 debit. Okay, TLT, I ain't mad at you. I'll try to take 9 cents if I have to. I just want to get out, or at least get this trade going. So let's see what happens. Saying 9 cents on TLT, SMCI. That's the trade we put on yesterday. That got filled as well, and we're getting destroyed. Not destroyed, but we're getting hurt on XSP. I'm not gonna freak. VIX again. That's a November 15th. If it goes somewhere, it goes. If not, we'll just let it close as it closes. X, which is U.S. Steel, that gave us okay. Okay, there's that alarm. U.S. Steel, we did get the strangle. It did go 8 deltas all of a sudden, but that's with just, just literally basically a flat P&L. So I'm not going to freak on X. Now the one that's hurting, XSP. If I move this to, and I roll that expiration to the next expiration, which is 11/14, oh, there's nothing there. So we can't roll it yet. So we're going to see if this market, again, XSP has been going up. It's already up $1. If it should go down, which means that the SPX is up 10. Yeah, about 10 or 11. So, it is what it is. We still got a few days. We got Monday. What is today? Today is the 8th. So, if this thing should want to roll around Monday, and it was actually the SPX was up. It was over 6,000 today. So the SPX did get over there over 6,000. So, and usually when it hits a high number, there's a lot of orders that, a lot of people want to sell out. I don't know about that this time, but if they do, that'll give me a chance to do one last chance to roll this trade. I could exit it now, but I'm like, nah, let me I still got a few days. I don't freak until, it's a little later than I want to. I would love to get out, but I'm not going to freak. Okay. I am getting hurt. Not as bad as it could be, because our risk is only 122 from 188. But I'd like to take at least $30 off of this trade, and then I'm good. If I could take, like yesterday, that trade that I put on, I was trying to take $20 off of this. So therefore, if anything, it's $1 loss. But I'm not going to freak. My thing is I want to get out of, let's see where we're at here. Let's get out. Get me out. Okay, replace it. An SLV. Get me out of the trade. That's the one I want to get out of. Because I did 2 rolls in that. And once you do like more than 2 rolls, chances are it's telling you that the thing is still a little too volatile. Okay, market's just open, so I'm not seeing anything. And I want to get a free money trade on TLT, which is free cash. Excuse me. TLT, let's see where the liquidity is in there. Excuse me. Is there liquidity on the strikes I'm trying to roll? Take it off of extrinsic value. Yeah, so there's a lot of liquidity. So they should, there's enough liquidity. It's not like massive, but this thing should fill. It should fill on TLT, and that'll give me a free trade. In other words, no risk. So it should fill. So there is liquidity there. It's not like there isn't. Let's see. And again, XSP, I'm not going to do anything with because we're getting hurt on that. So I'm going to sit on my hands because I can't roll that strike into next week. Plus, if I did, it'd be almost nothing. Yeah, it'd be damn near no money to roll that strike in the next week. And I don't want that kind of risk. I do not want that kind of risk of zero. It's just it's not worth it. I'd have to roll it with some sort of debit spread. Roll it with a debit spread. With a credit spread. So therefore, that credit could possibly pay for the losses. But I don't want to do that. I'm just going to sit on my hands on XSP, which is, it's definitely hurting. It's definitely making me go ahead and say, damn it. But it was a speculative trade. Spec trades do that. It's the income trades that I'm more concerned of because I want to get out of this. Okay. TLT is now trade. Okay, it's still there. I'm not going to let them bully me out of this trade. So if bonds do rise, because at the most I would get out of this is at the TLT trade. If I did this, the most I would do is I'd get out And see, it said 9 cents, and I'm a penny above the market, so it's not like, I mean, I'm actually giving them some money, and they're not getting me out. So we'll get out at 9. We'll try to get out at the mid price. I even elevated the mid price. Same thing with SLV. And mid price is 99, so I'll go back up to 99. And I'll say, okay, get me out at the mid. Okay. So we'll see if they get out, if they let me out. Anyways, so the other trades, FXI, where are we at in FXI? Do I really want to stay into FXI? We got a third of our money in FXI. So you know what? Let's get out. We made 33% on that. Let's get out of FXI. As we are, okay. So we're going to get out of FXI. We're going to get out of, and let's see what FXI looks like on the curve. And we've got a little less than 33% on the other one. So we're going to get out of all of these. And we're going to make TLT a free trade. So FXI about 33%. What's the other one that we got? SLV about 33%. And we're going to try to get out of all three of these. Okay. Now they're changing my debit on there. So, okay. I wanted to get 50% because you remember that's what we went in for. But I'm looking at implied volatility, and the implied volatility went down. So, if it goes down, okay, 67, we'll shave a penny off, but I want to get out. Okay. I want to get out of that. So I don't mind, I would love to get like 40, 50%, but I'm not going to chance it. And a lot of that, it'll take some of the steam off of the XSP trade. It'll take some of that steam off. And plus, I've rolled it 2 times. And the FXI I'm not as worried about. It's a SLV where I've rolled it twice. And anytime when I do more than one roll, that really tells me that I got to chill. I really got to chill. So other than that, in terms of inventory, the other 2 trades got filled. So we're good there. The other 2 trades, the SMCI and X, those both got filled. And those are the strangles. Those got filled late yesterday. And so I'm going to sit on my hands on these other trades and see if they'll fill me. Like I said, it's like the Roach Motel. Tasty trade will let you in, but you can't get out. Market will let you in, but the market won't let you out. So anyways, I normally don't look for new trades on a Friday, but we'll look and see if there's anything. Let's go to watch list instead of positions. Yeah, let's see it. Except for those. Okay, why can I not get into my regular positions now? What's going on, Tasty Works? It's not showing the rest of them. Wait a minute, I'm gonna have to go back out and go back in because it just came up as positions, and I should be able to see the other watch list, which I cannot see. So I'm gonna go out and go back in and say, all right, Tasty Works, show me the money. Show me the money. Okay. So we're going to do that. Hotep there, Brother Will. Yeah. So, I mean, basically, man, I hope I pissed, Brother Will, I hope I pissed folks off in that last live stream. I mean, I really, trying to, I got, Brother Will, I don't know. A lot of folks are heavily caught up into the machinations of someone else's society. And I'm like, man, just win the game. Just get out there and win. So, so we're getting hurt a little bit on XSP. I just want to fill these other trades. Where are we at on this? So, okay, I'm going to go back down to 66 cents. I mean, that's the mid price. Get me out. Oh, man, it's 65. Get me out. Get me out of the trade, Tasty Works. FXI, SLV, Okay, so SLV is working against us. So we're gonna go up 1 to $1. And if not, then I'll just wait another day and collect theta. And then TLT, get me out. It's not like there isn't liquidity there. There's liquidity there. I don't know about the other ones. So there is liquidity. There is, there is something there. Cool. TLT now, Brother Will, is a free trade. No risk. No risk whatsoever, which means it could go anywhere. If it goes, and which I doubt, but if it pins, it doesn't even have to pin. All it has to do is closer to the days of expiration. All TLT has to do is get toward all it has to do is get toward the 88 mark. It's at 92. If it could fall anywhere from $2 to $4, it's free money now. That's what I love to see. That means that if this triangle, doesn't matter where this triangle goes, the green tells you no matter where this little green triangle goes, it means that the trade is now totally free. It's a free butterfly. That's what I wanted to see. So whether it goes up or down, I'll either make $1 or I'll make a whole gang load of cash. I would love to make more, but I would rather, and that's usually if the market moves drastically above you. But now, cool, free trade. It just costs commissions. So let's see. Hold on. Let me go ahead and let me do this, Brother Will. This is great. One sec, Brother Will. Okay, I was getting ready. I was trying to get my fireplace fixed, but I just got the dude that's gonna fix it. He's feeling ill, so I'm trying to reschedule it. So, anyways, so here we got so EEM. That's pretty much delta neutral. And basically that was a calendar, a double calendar. So all that has to do is again we're just making money theta. Now we got a negative theta, so we're losing about 13 cents because the volatility should be, yeah. Actually, we should be making money because we do have, yeah. So we've got volatility and vega and theta working out in our favor. So literally that trade is going nowhere. And that's, I think, another November 15th trade, and that's emerging markets. So we're going to see. Again, that thing can move on us, and then we'll be in trouble. But we'll see. FXI, they're still not letting me out. Come on, let me out. SLV, okay, we're going to drop that price because I want out of SLV, Tastyworks. Get me out so I can keep that cash. We're out of SLV. Great. So we got about 34% on that. Cool. We got out of that 33, 34% on SLV. Nice. Let's just double check, make sure that we closed it. Activity SLV. Put call. Let's see. No, let's go to field. because I want to double check. Sometimes it'll look like it. Okay. Oh wait. No. Okay. Other. Okay. So yep, put call. So we're out of SLV. What was it? What did we do on that? SLV 2410.99. Let's just go to SLV so I could see what happened on that trade. And what were we going for the December 20th? So we got 94, 23, 24. So yeah, so 90, 94, 23, 24. So that's 5. So that'd be, yeah, so we got about 30%. Yeah, a little over 30, well, 30% with commission. So I'm good. I'm out of that. And we got a free trade on TLT. We got that. Now we're going to see if we could get 33% on FXI. I really would like to get 50. But since, again, this election situation, I think volatility is being crushed faster, but I'm not seeing the volatility crush happening on the securities that we got. And then we got a free trade on free trade on TLT, which means we could just sit on our hands and whatever happens, it could expire. We don't care whatever happens to that. That's great. I love free butterflies, man. I love them. Free butterflies and the VIX, and the two trades were getting destroyed, not destroyed, but beat up on is VIX, but VIX is till December. So anything can happen between now and then in December. So I'm not really freaked on VIX. VIX is like, again, it's a crapshoot, speculative trade. So I'm not gonna worry about that. It is what it is. X, okay, that was the one we put on yesterday. It was X and SMCI and XSP. So we can get the 30% on this other one. If we could get 30% on FXI, cool deal. We'll get out and we'll just sit and wait on the other trades. So let's start looking for some new trades. Cool. So those 3 kind of worked out today. The one didn't work out, but at least the other ones did. So we're out of that. Plus we got our buying power back. So now we can start putting on more and more trades. I love building the buying power. That's very important. Okay, there's the watch list. That's what I was looking for. Since volatility has been so low, look at this, like 14. I'm not looking at selling premium. I'm looking at buying premium. So now it's a premium buying situation, kind of like what we did with SXP or XSP. That was a premium buying, like emerging markets. That's premium buying. And the thing is it's very important. Oh man! Oh God! I did that again. Man, I'm not getting sleep there, Brother Will. Okay, share screen. God dang it. I did that again. I had the mic off the other day, and then I had this off. Okay, just to show you what that butterfly looks like. We made some trades to give you. So you see the XSP trade is tearing me up. If you look over here, it's tearing me up a little bit. We're definitely down on that. Not as much as we could be because the original XSP was, at the very bottom. The original XSP, that trade over here, it cost us $188 or $1.88. But now we brought the cost down to $1.22 by doing that first roll the day after the election, their election. X was the trade we put on yesterday, the strangle, and that one's really going nowhere quick. We are 10 deltas, so this thing is definitely going up against us. But in terms of the amount of capital loss, it's a $7 loss with 10 deltas on X. And X is this one right here, this strangle that we put on. So it's still on the mountain. It's not like falling off the mountain yet. It's not really freaking me out. It just makes you kind of scared. Like when a child is starting to get closer to the edge and mom says, hey, you better start, get away from that edge. We're not there yet, so I'm not going to freak. VIX, of course, VIX was that vertical spread. It was an election gamble. And that, of course, is going against us. That was pure election gambling. I didn't care. I was just like, let me gamble on that. TLT was that butterfly that we just adjusted, that butterfly, and that's a pure free trade right now. I love free butterflies. This is the free butterfly right here. Okay, this is what it looks like. That means, okay, anywhere the market goes, it doesn't matter whether it goes down, up, inside, out. From now on, it is completely free. The key is we want it to end right in the middle. And of course, for that happening to end right here, this like I've got like a 10% chance. Let's see, 88. Let's see what the chance of that going down there to the 88 is. There's like a 10% chance it'll get down there, but still, yeah, it could to the 88. No, actually, it's got a 18% chance that it'll get down there. But it has 36% chance that the market will get there between now and December. So there is a 36% chance it'll get there. We just won't get the entire full, because what I did is I spent like, what was it? What was our buying power? I can't even remember what it was. I think it was like $80. It was like $81 to make $111. But now it's a free trade. So it doesn't matter whether it goes up or down. All the risk is off the table, which is what I love. Those are the best trades to have, free trades, because there's no risk whatsoever. As you can see with the green, if this thing moved all the way down here, we'd still be making money. Now they're saying the expected is it shouldn't be because it shouldn't be 35. The expected should be like $1 or $2 or something like that, because we got $12 credit, and so it'd be like $1 or a couple of dollars either way if it went all the way up or went all the way down. We won't make more than a couple of bucks, in terms of the actual trade. But the thing is what I like about this is if it did get down there toward expiration, then we'd be Money Monday. But no matter where it goes, it's free, so it's free risk. SLV, we just got out of that, and that was the strangle. I had to close that one, so there's no position on SLV. That's the one just closed. FXI is the one I'm trying to close, and let's see where we're at on that. 64. Okay, let's just keep, because I don't mind this. If I could get 33%, what would that be on FXI? It'd be around 33%. Replace. I'd love to get 50, but if I can't get 50%, and because volatility, I look at the volatility, and volatility is gone out of this. So it could only go up. So I would rather get out now while I have a chance to get out before volatility goes back up. So I'm trying to get out. And hey, the price keeps going down on me. Let's keep going down. Let's get out. Tastyworks, get me out. Get me out of this trade. I want to keep that 33%. Okay. Let the market, the more FXI goes down, it's getting more into the middle of that mountain. EEM is the last one, and that's the calendar spread that's going nowhere fast. And a lot of that is, again, it's still a little volatile, but all we have to do is just sit and wait. It's a double calendar, waiting for volatility to do something in emerging markets. And it may not. It may not. I was looking, now we're losing 11 cents on theta because, of course, volatility is we're getting, it's kind of balancing out, because as it goes down, volatility goes up a little bit, but we are a little bit short deltas. So, so that, just a tiny bit, like barely. But before I was making, I think it was like $8 a day of theta, but now it's definitely down in terms of its theta. But we'll just sit. Like if EEM stays where it's at between now and let's see if we could do it on a curve. I saw Tony do that yesterday on Tastyworks. I really would love to see their curve analysis get better. It'd be great. So, I mean, literally, yeah, this thing, I mean, when I put it on, it was a lot different. We'll see what happens. Let me see. We'll see what happens, because what did we pay for this? We paid 77 cents. And it was a double diagonal. 77 cents. So if let's analyze this, what would happen? Oops, analyze. I hit the wrong one. Analyze. There we go. Say if it stayed the same, let's see what would happen. I don't know why their Theo is showing a $9 loss. If we Okay, yeah, we wouldn't be making too much um, if we drug this out to the 12th to the 13th. Yeah, we wouldn't be making much if we drug it out to then. But yeah, I was looking at volatility going up, but it doesn't seem to be wanting to go up on this one. Well, we're gonna sit and wait. We're gonna sit and wait and see what happens on EEM. As it starts getting closer toward the expiration. So let me see what else we got. Let's see. Okay, we'll look for some trades. Now we're looking at buying, not selling, but buying volatility because volatility is so low. You know, so it's a big inventory day. I shouldn't say big; it was a great inventory day of just moving stuff around. If we could get filled in FXI, this would be great inventory in terms of just getting rid of the old supply and putting in new supply in the store, because that's all this is a store. Get rid of the old supply, move that outside the store, and now start looking for new supply to start selling or buying for the store. Look at Tesla. Tesla just keeps going up and up in volatility. Those folks that made that Tesla trade would probably be a little hurt. So is the screen still blank? Hopefully you could see it again now. Hopefully everything is cool. I don't know what I was tripping on, but let's look at new trades. We've got some doozies out there. That X trade and that SMCI. That SMCI is definitely expensive in terms of the maintenance, the capital maintenance. That SMCI is definitely costly. The volatility should make it a little more costly. Because what is SMCI's? Where we at? The last price? Yeah, it's not really it's not an overpriced stock, but the capital requirement for it is definitely it definitely cost a couple of pennies on that particular trade. Because I was watching that, the capital requirements on that. But anyways, all right, let's look for some new ones. So we know that SPX is up. Okay, it's up 16. VIX is down 3%. VIX down 3%. Wait, damn, this thing is just getting hurt. Again, post-election. The cost of money, bonds should be going down because of the Fed. Oh, okay. That's interesting. Fed cuts rates, and it's up almost 1% yesterday on the cost of money. Interesting. I guess that rate cut didn't really matter. Interesting how that is. Normally you would see it fall. I mean, no, actually, no, it's right. The bonds did fall. Excuse me. Because it's up. Because the price of the bonds are up. So that means interest rates did take effect. My bad. So yeah, it worked. It's up 1% because of the interest rate cut. I was thinking the other way around. I'm thinking of yield and not the bond itself, but the actual yield. Because if we look at the yield, which is either the 10x or the 10 slash 10y. Let's go. 10y. We should see that this goes down. Yeah, so it's down 1%, and that's the actual yield itself. So that makes sense. Okay, which is why you're seeing a 16-point upswing on the S&P. If we look at the Nasdaq, you should also see either flat or a little bit up. Oh wow, Nasdaq. Okay, it's only down 0.0. If we go to the Russell, it should also be up. It's up point. Yeah, so that makes sense. Okay, up just barely. So the mid price is 63, and we're just going back between 63 and 64. Tasty is playing with my mind. My mind playing tricks on me, like the song. I think it was Scarface. Anyways, let's look for some trades. And I normally don't do this on a Friday, but since it's Friday, we'll look. What we're looking for is low IV rank. First off, there's got to be a lot of contracts. Gang loads of contracts. Well, we know Netflix will have them. Look at the IV rank at Netflix. Goodness gracious. And look at that, down 4%. PayPal, IV rank is, minus that. IV indexes are at 22. And the implied volatility change. I wonder if, what's the name had earnings? PayPal, I thought those were the first ones. It had earnings. I don't think, yeah, because earnings season should be over. Yeah. So, oh wait, that's the FX side. Let's go to PayPal. Look at that. I mean, it's got all-star liquidity without a doubt. There's going to be a lot on PayPal. Same with Netflix. I don't know why it's only showing. Maybe it's because it's Friday. There's only 259,000 contracts. So look at all those stocks that are very low volatility. Remember, when you're dealing with low volatility, you're more directional than when you're dealing with high volatility. And look at that. So they're saying that Netflix and PayPal could actually turn around and go down to the downside because all these things went up because of this quote unquote election. So these would be very bearish, I won't say uber bearish. Look at this. Lyft, minus 3% implied volatility. This is all because of their so-called election. Look at all these, massively low volatility, which means you're buying very cheap volatility. Look at PayPal. It's like, damn, nothing. Look at Uber. And you could look at a chart that these things should have gone through the roof. Let's go back to Uber. That's PayPal. Let's go to Lyft. Let's go and see where that is on a chart with negative volatility. Look at Lyft. Lyft's actually spiked, which means it more than likely is going to want to fill this gap. Look at Lyft. It just went, and what was that? Like a 20% move? That's insane. That is insane for Lyft at a minus IV rank. That means that this thing has room to the downside. It could easily roll to the downside. Let's go to Uber. Lyft, man, that was an earnings play. Look at now. Uber's different. You would think that Uber's being this low implied volatility that Uber would be going up. So Uber's interesting, and it can move $4 easily. So Uber's another one to take a look at. Let's see, Bristol Myers. I've never really traded that, so I don't know what kind of. Let's look at the King. Let's look at the volume on it. See if there's liquidity there. Not much. So okay, I can understand. There's not really anything there. UPS, that should have a lot of liquidity, even though and again, they're only trading this today because it's Friday. So chances are, it's post-election Friday, the whole 9 yards. You might not see the liquidity. Okay, let's let it populate. There's a little bit of liquidity on UPS, not to the downside. It looks like not a lot of folks are buying puts. They're definitely not looking at. I think they might be thinking there's risk to the upside for UPS. Let's see a chart. Well, this is definitely not a trend chart, so it's interesting. You got implied volatility on the floor, which means chances are this thing will fall more because they're looking for implied volatility to go up. Again, I'm into buying volatility when it's cheap, and VIX is down 14 at 14. That's about as cheap as, and it's continually falling. Again, the post-Trump effect. Look at this IV rank at 6.6. Bristol Myers. I think we just looked at that, or did we? Yeah, because that didn't have liquidity. Roblox. I've never traded Roblox. Never have, and I don't think I ever will. I don't care about Roblox. I know it had liquidity at one time. It was just ridiculous liquidity. It was like the darling of a lot of things. But let's see what December looks like. Yeah, it's got liquidity. Look, somebody believes that this thing, there's at the money. No, these are in the money calls. You've got 1,500 in the money calls. How are they doing that? With 15 money in the calls. Then you got a bunch of out of the money puts. Okay, so somebody is chances are there's either some kind of a spread here, or they're selling a lot of puts to finance being able to buy these calls. Somebody must believe that Roblox is going to go through the moon. Has it crashed? Oh, no, look at that. Somebody must believe that this thing might be going to the moon, because that might be the case, that you have a gang load of, and that's why I like Brandon's analysis over there at Theo, because look at all these out of the money puts. There's somebody's trying to gamble thinking that this thing will fall through the floor. But if they have this many out of the money puts, you got this many in the money calls. somebody is selling this to finance being able to buy this, that they think that this thing should be going through the roof. And that's what I'm thinking. I'm thinking that somebody might be. I may be wrong, but I'm thinking that that's in December. You know, that this 50 strike, because nobody would sell an in the money call like that. It'd be insane to sell that in the money call like that. So somebody's buying these. How are they financing it? They might be financing it with these out of the money puts. I mean, I'm just theorizing that might be the case. Anyways, but I don't trade Roblox. I don't do that. Microsoft, 3% implied volatility, and all these things are red. I love it when it's red. When I'm buying volatility, I want to see red. When I'm selling, I want to see green. Look at that, Microsoft. That's one that definitely has gone through the roof. Otherwise, I mean, because that's a pure volatility play. Nope. Actually, look at Microsoft. It's been ranging. It actually gapped on their earnings. But check it out. This is the Trump effect. Look at those two candles right there. So it's definitely, you know, was that earnings? What was that happening with Microsoft at that time? I'm thinking that they must have had earnings going through there. Um, but look at that. It had gone through. It was definitely going through the roof, but it's just ranging. That might be a calendar spread or a double calendar or a double diag. Let's see what else we got. Because again, look at the low volatility, low IV rank. I mean, if we look at the individual trades, look at that 18, 19. This thing is begging for me to buy volatility on it because it's very low. It's very cheap. Again, the king, queen, and then of course the king. That's 2 million contracts. It's going to be liquid. Let's see, AMC. I never traded that. That's one of those meme stocks. Let's see, Verizon, 2 million contracts. That's what's being traded. Look at the low, 4.4 in volatility, 16. I mean, how low that? Like the old thing. How low can you go? And it's already fallen 5% in the last 5 days in volatility. It's a lot of volatility to be bought. And those are usually where you do defined risk trades to buy volatility. There's a lot to be bought. So Verizon, let's see what the liquidity on Verizon is like. Let's see, trade. December. Does Verizon have liquidity? Does it have liquidity? It's got a little bit. It's not nothing to shake a stick at. So that's definitely a viable trade. Let's look at the chart. And again, when I buy volatility, I'm more directional. It's funny because this thing has been falling on lowering volatility. It's not terrible, but it's if you look at where it's at, it's kind of in its mid range of where that the high and the low of the volatility. So I'm not going to deal with Verizon. If it were down lower, then I would look at buying it. But look at where the red and green lines are at, kind of like right in the middle. That's not very safe. Because this thing can actually get more volatile. So I'm just going to sit on that one. I don't think I want to deal with that. See, Amazon, nah. Let's see who else has got. I mean, look at the low volatility. ARK Invest went down 7.9%. What has happened to ARK? Well, she's a friend of Elon Musk. What's happened to her? Yeah, of course. Look at ARK Invest. She's Kathy Wood's a deep friend of Elon Musk. Look at the volatility, how low it is. So ARK Invest looks like it might be. Let's see what the liquidity. We want to know what the king, and it should be. I mean, it's 2 million contracts. We're seeing some contracts here. It's not great, but there are some contracts. So let's see what else we got. So I may just sit on my hands on these, but Lyft is definitely something. I mean, look at that. Did Lyft? I mean, when was Lyft's earnings? Let's see. When were their earnings? Because let's see what we got here. Because I should be able to. Let's see. When was Lyft's earnings? They have no earnings, so I mean, I could look at a chart and say this must have been earnings right here, because let's see, indicators, hide. No, we don't want to hide those indicators, descriptions. Okay, how do I do the? Let's see. I think it was here, so I could see events. There we go. Events, show earnings. Yeah, so earnings should be there. Cool. And I want to see dividends. Yes, I do want to see dividends. Okay, good. Now I can see the events. No, it wasn't earnings. It might have just been the Elon or the Donald Trump effect that made that do that. The Donald Trump effect. I thought it. Yeah. So Lyft. Just look at how it skyrocketed. Chances are it's going to want to fill that gap. Low volatility. This thing can move $1.40. So I want to take advantage of that $1.40 move. Should it be able to? So how would I do this? If I think that gap is going to be filled, I'm not looking for a neutral trade. I'm looking for something to the downside. So if there's something to the downside, I'd say, possibly January. Even though this thing moved a lot, I want some room to be right. I want to get kind of closer because the delta's right here. 19, it only has a 38% chance of touching that area. Right here, if I go down one strike to the 16, I have a 58% chance that this market will get down here. At least it'll touch it, but a 29% chance that it will actually close there. So if I were to do this, I would probably sell. Since it went up that quick, I would sell 40 days and buy 70. Let's see what happens if I did that, how much it would cost. And that would be, let's say if we sold, because we want this thing to move. So if I did like the 16, which is, just outside the expected move, because they expect it to move $1.85, yet I'm saying $1.44 is where it could get. So if we're at 18, no, we're at 1738. So we're looking at it around, at the very most, $16 that this thing, I could even move it to the $17 strike, which is one strike out of the money. So therefore, it definitely could get down there. So it's 1740. I mean, it's easily, it could easily get down there. And say if I did that, I would do the 17. I could do a diagonal, which is, I would more than likely do a diagonal. So I would buy the 18, which cost me $1.38, and sell the 17, which cost me $83. So if I sold the 17 on December 20, and I bought the January, actually it will cost you more in January than so it will cost you, so it's going to cost you $1.34 in January. If I bought more than that, and it's no, so 227, because there is no 18, there's 19 strike. So in 1917, buy the 19, sell this. If I bought the 19, sold the 17, December, January. So what that would mean is, let's say the December, January, how many weekly strikes did they have between? So there's only one real weekly strike in there. So if I had to move it, I can move it 1 week. What's the liquidity in there? There's no liquidity. No liquidity there. I always look at that to see if there's liquidity for me moving a strike from December to January. Could I do that and not get hurt? The other thing is it's a $2 spread. I'm paying $1.40. You don't want to pay more than 60% of that. So $1.40 is close to that 60% threshold. If you pay more than 60% of a spread, then you'll never make money, regardless of whether it goes in your favor or not. You're in a losing equation. Thanks to Tastyworks coming up with that equation. Well, actually, traders have been doing that for years, but it really makes sense. That if you so it's close to that threshold of not making money, but at least you could eke out a little bit. So this is definitely because let's see, yeah, so that would be, so what, $2 uh of 20, 60% of 20. Yeah, so 60% of 20. So we're getting in that threshold, okay, of losing, of really, I mean, very, very close to not being able to make some cash on this. So, so I would actually lower the price in order to see if it'll get filled if I did this trade as a diagonal. You making about 38 cents a day, probability of profit of making at least 50% is you got a 61% chance of at least making 50% of the trade. You are 24 deltas, which means this thing has to go in your way in your favor. Okay. If it goes up $1, you lose 24 bucks. So you have to be right in direction. Again, it's a directional play. It is not a like a strangle or something like that. So I'm looking at that. I like Lyft because of how low the volatility is. I love that. Hold on for 1 second. So I do like Lyft. I do like that as a potential trade for a diagonal going to the downside. The only thing that really messes me up. Let me see if we could do this because I want to double check. Uh, let's see, 0.6 times 20 equals. Yeah, so no, that cost us a little bit more than that. It would cost us a little bit more than that 60% threshold. So that, yeah, we would not make money on this. On this particular diagonal, I'd have to do a different diagonal on this to make some money. Let's see what would happen if we instead of a 27, I mean a 1719. Let's see what would happen if we did an 1819. First off, let's look at implied volatility and see what if the one we're selling is giving us good implied. Okay, that's giving us 44 implied volatility on the one we're selling. The one we're buying, which is the January, 41 implied volatility. So what if we change that to the 17.5? Is there enough volume on that? 17.5. Okay, yeah, there's volume. So if we took that to 17.5 instead of a $2, we'll make it 50 cents. You see what happens. No, I really don't want to put it down. I'll make it 18. I definitely don't want. So it'd be $1 spread. So what would happen if we went and moved that to the next? Another one we're buying. Oh no, remember there was no 18. My bad. I forgot. So yeah, we're stuck with this. We're stuck with this one because this is literally a 50 cent, a 50 cent trade is not gonna, it's not gonna help you. You're not gonna really make any money on that. 50 cents, 50 cent spread, 17.75, and it costs you 50 cents on it, and it's a 50 cent spread. It's a loser right out the bat because you're paying 100% of the spread. I wanted to do this because I was thinking that I could get it down in price to where you're paying less than 60% of the spread. And that's what you want on diagonals. You want to make sure you're not paying more than 60% of that spread. Let's see what else we got on that position, on our position index. Let's see what we got here. I want to get out of FXI. Get me out. Well, it's still trying. I wonder what the liquidity on there is. With the liquidity, come on, get me out, Tastyworks. Where's the liquidity? Is there any liquidity there? Yeah, there's liquidity. Yes, of course, there's liquidity there. Get me out. Just close my trade. Stop messing around. Send that thing to the exchange. Best bid and offer. God dang it! Get me out. Give me free. I'm Amistad. Give me free. So that way we can close these positions at a plus. Okay, so the only ones that I won't say worried about, the ones I'm getting beat up on is XSP. And that one, there's nothing I can do. I just sit on my hands and just wait. In a ways, I would feel like, man, you should have closed it yesterday. Because but hey, anything could happen. And XSP is still, I mean, it's what the SPX is 16. It's like 16 points up right now. SPX 1681. So I mean, this thing is definitely, it could turn around in a heartbeat. I mean, they've already hit the 6,000 mark earlier today, which is what I was anticipating. Was this thing to hit 6,000 and then want to turn around? Actually, SPX, what did it hit? No, it got to 559.90. Let's see, 59.90. I thought it got to 6,000. The futures got to 6,000. So I was expecting this thing to hit 6,000 a day. And then, once all the orders get wiped out of there, then all of a sudden I could start going ahead and licking my wounds, because that's a big gap right there. That's the Donald Trump gap that happened there. That gap that happened 3 days ago. That is the Donald Trump effect. So anyways, so I'm going to sit on my hands. Let's see, the Uber trade. Oh, wait, before we do that, we're going to look at maybe two more trades. There's Uber. Lyft is okay. But the only thing is, I think liquidity. Let's see, because I think Lyft had liquidity. Let's check it out. Or was that the one we were just looking at? No, that was Lyft we were just looking at. Let's look at PayPal. Okay. It's got liquidity. Or let's just double check and see wherever we're at in terms of either a calendar or a diagonal. Because of all the low volatility, I don't mind speculating on these. I do not mind. Let's see, what's the December look like? I mean, it's got liquidity. Not gang loads, but it does have something. There are somebody trading these. And if we go to the open interest, there should be a gang load of contracts being held. Oops, that's out of money percentage. Open interest. There we go. Yeah, so folks are holding these contracts. There's a lot of liquidity in terms of contract holding. It's just the amount that is traded. We're not getting a lot of trades at those. But there's a gang load. There's thousands and thousands upon thousands of contracts being held that people already have. So if I were to look at, again, this thing, I'm looking at, let's see what, again, speculation that this thing could fall. And I wouldn't doubt it, but I just want to make money on the fall. So, and it's going to take a little while to fall, more than likely, because of an election. You're not going to see markets fall overnight. So I would say, at least give 42 days for something to happen for you, because you're looking at 42 days away. That should give you, about a month. And, this is Christmas season, so you got to be real careful. This is where, a lot of transactions happen, and markets may not fall because of Christmas season in December. So, because that's usually bullish. So if I were to do this, again, I would do a December, January thing. And what would we be looking at? Again, all we want to do is for it to fall a little bit. 34 delta means it's got a 68% chance that it'll touch 80, a 46% chance that it'll, touch 77.5. If I did the 80, if I did like an 80, 85, I would sell the 80 for $1.71 and buy the January 85 at $4.95. The spread is a $5 spread. 60% of that, it doesn't fit our wheelhouse. So 60%, 0.6 times 5. It's just it's about 60% right there. This is, where the market's at is a little bit. It's 311. So it's not like great, but you do have a 50% chance of making, or 70% chance of making 50%. You got around a 70% chance of doing that. You are 24 deltas long if you did this trade. It will cost $3 to make this trade. The gamma is not as terrible, but the delta definitely, you are making 73 cents a day. So we're going to keep this PayPal trade in the wheelhouse. Let's look at the curve to see what the curve looks like. So this is the curve. Let's take the expiration curve off. So this is the mountain. Let's see what the mountain looks like. He's got a big mountain to climb. Put the expiration on where he's at right now, and if this market just went and went all the way to our where the lower part of that mountain is. Let's just do this. Like just like before, if this thing hit the lower part of the mountain on the next day or so, we'd be down like about 80 bucks. At the very about 80 bucks. No, actually, no, if it hit the lower part of the mountain, we'd be down like 80 bucks. Because you want him to be up on the top of the part of the mountain. The key is this orange line. You want that. That's what's in your favor. And you want that to happen. So, if this thing went, we'll say, because remember, this thing can move easily $4 either way. $4. So if this thing, and I say $4, why? Because I double the ATR, especially when it gets more volatile. So doubling the ATR, if it went $4 either way, from 82 to 86, you'd be down about 40, 50 bucks. If it went where it's at now, 82, and went down to 78, you'd be, let's see, how many bucks would you be up? You'd be up about 78. You'd be up about 100 bucks if this thing moves. Again, doubling the ATR. So you'd be down 50 and up, and be up 100. Should theoretically, and especially that's not taking any account for volatility. So I don't mind this PayPal trade. It's a 2-to-1, risk 1 to make 2. So I don't mind that in terms of its the way this mountain is sitting. And if I could get rid of, like, again, I'm gonna get rid of the expiration mountain and just deal with this mountain that we're on right now. So if this thing went to 86, you'd be down 43, about 86 bucks. You'd be down about maybe 44 bucks. If it went down to 78 bucks, you'd be up. No, actually about 95, 96 bucks. No, actually, no, you'd be up 90. Actually, more than that. You'd be up 100 bucks. More than 100 bucks if this thing went $4 down. So I don't mind that. Okay, a 2-to-1. I'm not mad at this trade. And that's not taking into account theta and volatility. That's just if it went $4 one way or the other, all things being equal. It's not bad. It is not bad. That means that it's definitely working in your favor in terms of volatility, theta, and delta, the movement. So anyways, just giving you some ideas. So the thing we're at right now is closing FXI. That's the last thing to do and I got the order in for that to close that trade. I'm gonna sit on this PayPal and on this Lyft trade for a minute, and then I may put that on later on today because it looks like volatility is going to continue going down as they try to push the SPX up to 6,000, because that's usually where the big numbers are at. There's a lot of big numbers at 6,000 SPX. I can show you. Let me show you real quick. Let's go to SPX. Let's go to the options, and we're going to take a look at those contracts. We could go to today, or we could go to December. More than likely December, since it's 192, there's going to be contracts up there. 6,000, 3,000 contracts right there to 1,200 right there. And that's the December trade. If we go to today, just to see what's going on today in terms of 6,000, 27,000 contracts on the 6,000 today on the call, meaning people think it's going to go to 27,000 contracts up at 6,000 as opposed to 2,000 contracts. There could be people that are selling that 6,000 spread. It doesn't mean they have to be buying it. But at least you know that up at that area at 6,000, there's it's right at the corner. I mean, it's literally just what, 9 points away. And this thing, they're looking at this thing moving today alone 13 points either way. This thing is 6,000 already. My thing is just trying to capitalize on whether there's a lot of folks getting ready to sell it or buy it at 6,000. 9 times out of 10, they'll sell it because it's already reached a pivotal number. That's a big number. To end Joe Biden's term at 6,000, he's got to thank Donald Trump for that. Okay, and the Fed, their Federal Reserve. He's got to thank them both to get. He could say, "Look, I dragged the market all the way to 6,000. Cool deal, whatever. There's no skin off anyone's back, except for mine. If XBS doesn't go down, but other than that, there, brother Will, just giving you some insight. Anyways, I'm a lot longer than I should be. Anyways, Hotep.